Welcome back. The HCL Tech numbers are out. That's the revenue picture, 19,300 crore versus poll of 19,100 crore. I think the net profit has also beaten street estimates, and I think in the break Sonia was telling me that they have increased the guidance as well. Net profit of 3980 crore. That's a big beat actually. We need to see if there's one-offs. Margin also 22.9% versus a poll of 21.2%. So these are good numbers.
And also importantly, the guidance has been raised both on the revenue and on the EBIT front. So I think that's the most important thing to look forward to. Revenue expected to grow quarter on quarter between 2 to 3% in constant currency for Q4. Remember, the Q4 revenue guidance earlier was 1.5 to 2.5% for both Q3 and Q4. Now they have raised it to 2 to 3% in constant currency for Q4, including the DWS contribution. So this was expected, but they have done it. And the EBIT guidance has also been raised to between 21 and 21.5% for FY21. The EBIT guidance earlier was 20 to 21%, and now they've raised that.
Yes, I'll just read out one statement from Shiv Nadar. Shiv Nadar was the first CEO that I interviewed. So the technology sector is in the midst of a massive digitization wave. I think that's a big statement that he's talking about. And I think we should flash some of the statements that he's making. But do we have Rima as well?
Oh, yes, we do. Yeah. And Rima, I mean, guidance also upped. Tell us what stands out for you.
Well, again, like we've seen with the rest of the IT pack, this is an all-round beat. And I think the most heartening bit is the kind of margin expansion. As we've been saying, at the start of the year, the assumption was that, their clients are under pressure and therefore there will be pricing cuts, because of which IT companies initiated a lot of structural savings. Of course, there was travel costs, a cut in discretionary spend, but cost optimization projects also got on board. But what we've seen through the course of the year is, because demand environment has been so strong, pricing has been stable, and therefore the cost cuts which all the IT companies undertook has actually passed on to their margins. So it's the margin performance which has been absolutely blowout for across the board. Even for HCL Technology, again, when they started the year, they had guided for margins of 19.5 to 20.5% for the full year. This was progressively increased to 20 to 21% in the last quarter, and now this has been further increased to 21 to 20.5%. And bear in mind, this margin expansion comes in at a time when the company is also expecting wage hikes. They've already announced partial wage hikes in the quarter gone by, and for the senior employees, it will kick in Q4. The revenue growth guidance for the next quarter at 2 to 3% is also pretty substantial, but this is on expected lines because the company had made an acquisition, DWS, if you remember, in the infrastructure management space in Australia and Africa, and that was expected to contribute incrementally to their guidance. So 2 to 3% quarterly guidance for the full year, for Q4 does not come as a surprise, but I think what the street will like is the margin expansion, and that could drive some EPS increase. Again, on the top line as well, the company has delivered a 4.4% revenue growth in dollar terms. This is again higher than the 3.5% that we were anticipating. And I think analysts across the board have just underestimated the demand trajectory, which is why, the numbers from all of them have been much higher than what the street was anticipating. The margin performance too has been absolutely solid, much ahead of expectations. The expectations were of flat margins. The company instead has delivered margins of 22.9% and expansion of 130 basis points. And I just want to highlight that in the last 9 months for HCL Technology, margins have gone up by 250 basis points. In the 9 months of FY20, their margins were about 19.1%. In the 9 months of FY21, their margins are now at 21.7%. So that just goes to show the kind of margin expansion all IT companies have enjoyed. But again, in a nutshell, good numbers.
Okay, Rima, thanks a lot for that. HCL Tech is a bit like Ajinkya Rahane. Keep discussing Kohli and Rohit Sharma, but the one which keeps silently outperforming. Sandip Agarwal is joining us now from Edelweiss. Sandip, good morning. HCL Tech has been, getting counted off late, and these numbers look quite good. But your first thoughts?
Yeah, see, this is an excellent set of numbers, and just to highlight, we are just 10 million off our estimate. We estimated 2607 million. They reported 2617. Our constant currency estimate was 3.5 and dollar was 4. I think they have more benefits on the cross currency than what we anticipated. On the margin, we were anticipating 22.2% and they have reported 22.9. So that is slightly ahead. of our numbers, 60-70 basis point. And I think this surprises will keep on continuing. Anuj, if you remember, I am telling this for last 9 months that no analyst, no company will be able to predict this wave. It is a very, very big wave. We will always underestimate the growth and we will always underestimate the margin. And every quarter, the reason of underestimation will be different. That's all I would.
Okay, there are two things I want to ask both you and Rima. There have been surprises galore from all the four majors who have announced numbers. What's, caught you by surprise more than the others? What's the pecking order now in terms of outperformance?
No, I am not at all surprised, Lata. My pecking order remains same. HCL Tech was always top pick since month of May, and followed by Infosys, followed by TCS, and in the large cap. And I will reiterate only one thing, that I don't have any negative view or even a bearish view on any stock in the whole sector. I am bullish on every single stock, whether covered or not covered. But I have my preferences, as mentioned, HCL, Infi, TCS. That pecking order has never changed, and I don't think I need to change that, because I am very confident that this cycle is of IMS and cloud, and the best performing stock will be HCL Tech in the whole pack.
Okay, well, some more details coming in to the press release. The company has signed 13 big transformational deals in this particular quarter. And even if you look at the geography split in terms of performance, it's been quite strong. America's business is up 3.2% quarter on quarter. Europe is up 6.3%, and rest of the world is actually down. But the key IT and business services up 2.7% quarter on quarter. So just a split up of what the geographies have looked like. Sandip, would you raise your EPS or earnings estimates or target price on HCL Tech post these numbers? And if yes, what does it stand at now?
Our EPS for FY23 is 63 rupees versus a street of 57.58. So we are already almost 10% higher than the street, but still we will reevaluate, number one. Number two, our target prices also are insanely high at almost 1481 from long time. So I don't need to change immediately, but we have to see how our estimates are getting revised. But I can tell you one thing, that, if you see the street numbers for margin for FY23 are much lower than actual margins for all the companies. And the way we have seen upgrades in Wipro and Infosys, same thing, will happen in HCL Tech for the street, and to some extent for us also, that we have to upgrade our EPS numbers. But for me,
rupees? Did you say 63 rupees EPS?
Yes.
63 rupees EPS will make it 16 times. TCS is trading at 28 times, right?
But my target multiple is at 28 times. So
okay.
That's why he's saying his price target is much higher.
So you think
price target you said is 1400, is it?
1481.
Okay.
So that's
almost 50%
both
jump
earnings and valuation is higher for Sandip, and therefore the price target is like 40% more than where it is now. Well, Sandip, just stay on. Rima has been poring over the press release. Rima, anything more you want to update us?
Well, actually, I was just calculating the kind of margin improvement the IT companies have enjoyed in the first 9 months of FY21, and the numbers are staggering. For TCS, it's 112 basis points. For Infosys, it's 312 basis points. For Wipro, it's 170 basis points, and HCL Technology, it's 250 basis points. So we're talking about margin improvements in a range of 100 to 300 basis points for IT companies in the first 9 months of this year. So even if you assume some of the costs will come back, like travel, discretionary spend, etc., even then, I guess a part of these cost savings will be retained, which means there is a possibility that the street could be surprised on the margin performance of IT companies going ahead, with the assumption that the currency continues to remain stable. Sandip, on the guidance, 2 to 3% is what the company is guiding for Q4 versus 1.5 to 2.5%. But this, of course, includes the DWS acquisition. Is this in line with your expectations, and even on margins?
So I will not go with what company is guiding at all, because we have seen all the companies posting much better number on growth and margin in the last 3 quarters, and I believe they are not doing it intentionally. But it is, as I said, it is impossible to catch the uptrend or the downtrend, and that is the reason they are moving very cautiously. But the kind of deal signings which are happening, the kind of transformational deals which are happening when we speak to global technology experts, and I can also tell you that even in the first week of Jan, all global experts are saying that the amount of deals which have been signed in the sector is highest, and is more than what other companies in the past have signed in 1 quarter. So in 5 days, the amount of deals which have been signed is more than what has been signed in 1 quarter in history. So I think we are in a very, very big wave, And I will not take this number of guidance at all seriously. In my view, the numbers will be much higher and much better. But I'm not saying that there is an intentional conservatism which is built in those numbers.
Yeah.
That is the.
Now, I take your point on that, Sandip, that, people are extrapolating past performance, but not giving due credit to something new that's hitting the industry. Reema, I wanted your word on deal wins. Any more details you can fill us in? After all, Infosys made us sit up with its deal wins.
No, Lata. In the press release, the only number we have on deal wins is that they've signed 13 transformational deals, which compares with 15 in the prior quarter. But the numbers that we need to take note of when the management speaks is last quarter they said the deal wins were 35% higher than Q1 and the deal pipeline was 20% higher than same time last year. So we would compare Q3's performance with these numbers whenever the management speaks, but nothing in the press release.
Yeah, I agree. Okay. Who was that who told us that the deal pipeline is bursting, and we never anticipated that?
In fact, that's what the management says in their notes as well. Shiv Nadar says that the technology sector is in the midst of a massive digitization wave. And not just that, C. Vijay Kumar says that not only was this performance strong in this quarter, but there is robust momentum in our Mode 2 and Mode 3 businesses led by digital, cloud and products and platform segment. Sandip, just wanted your view on the pecking order now, because the top four have come out with numbers: Infy, TCS, Wipro, HCL Tech. Where do your preferences lie?
So same preferences: HCL Tech, Infosys, TCS, Techem and Wipro. And I will give you quickly one reason why. Because I think, before the pandemic, digitization was the priority. Post the pandemic, cloudification is the priority number one, and priority number two is digitization, although they are interrelated, so very difficult to bifurcate. But like 2009 to 16, when HCL Tech, rode on the wave of, IMS, and the stock went up 14.5 times in just 6 years' time. I think, this wave is again of IMS underlying cloud, and HCL Tech is probably one of the have highest concentration of that business. So obviously they will benefit the most. And it is also very cheap compared to other names. So I will say from a percentage return perspective, HCL Tech is a no-brainer, and I will keep it as top pick for at least next few quarters.
I'll remember your 1481, like I remember your December 6th prediction, Sandip Agarwal. But Sandip, just before we let you go, because the markets have opened and there are other stocks as well to look at, prepare us for the mid-caps. What will be, earth-shattering? You can't hear us. Mid-cap IT, what do you think might be extraordinary according to you?
So Lata, see what happens generally, and if you see last 25 years cycle, whenever this kind of demand environment comes, after some time, the large caps get exhausted of taking all the kind of deals. They become extremely selective. Our channel checks, global talks with experts say that already 2 of the large IT companies have become extremely selective in taking deals in the market. And when that happens, then obviously, a lot of slowdown happens to the good quality mid caps like Mindtree, LTI, LTTS, Persistent, Buildasoft, all this. And if you see any of our reports in last 1 year, you will find on the front page, we write very boldly that we believe Mindtree and LTI are Infosys and TCS in terms of shareholder value creation over next 10 years. So I think that, these are excellent companies, may look expensive. And last point, which I would like to leave for investor community, is that you go and check data in 2009 to 16 cycle. Also, when you were seeing the forward multiple, it used to look very expensive at 35, 36 times. But when you go in history and check the actual multiple, it was only 18. That means that, at that time also, every quarter EPS was getting upgraded. And same thing is happening right now. So what you are seeing today as 35 times, 30 times forward multiple, that could actually turn out to be only 18, 20 times, because the beat in EPS is not going to stop here.
Okay, so this is where experience helps. Thank you very much, Sandip Agarwal, for being with us with yet another big result and giving us a bunch of your forward-looking observations. Very useful for the investor community. Reema is still with us. Reema, I know it must be exhausting reading all those pages, but have the last word.